Hey everybody, Tony here with the fourth and final part to the supply and demand series. In this part of the series, I'm going to be talking about the strength of supply and demand zones, identifying how strong or weak a zone is, and determining, when a zone may be or may have become weaker and is almost invalid. And then in the second part of the video, I'm going to be talking about, how I play around these zones and kind of my strategy to trading them. So let's hop right into the strength of a supply and demand zone. If you can see from this image over here, we have the strongest zone, a strong zone, weak, and then vice versa. This is supply, this is demand, strongest, strong, weak. You can see the strongest zone is identified by the interaction with it and the amount of time spent within the zone. You can see here that one candle is all that remained or stayed or interacted, for lack of a better word, with that zone. So that's going to be the strongest zone. When we're trying to identify the strength of a zone, it's important to remember the least amount of time spent within a zone, the stronger that zone is. The more time spent within a zone, the weaker that zone is, or the weaker that zone has become. So that's very important to remember. You can see here with this zone that's labeled as strong, but not the strongest, about 2-3 candles, interacted within that zone. So that zone is obviously weaker than this first zone. And then all the way over here to the right, we can see this is the weakest of the three zones. Look how much price action, stayed or remained within that zone. So what we can pull from that information is that is a weak zone. Maybe it's a zone that's on its third or fourth test and it's finally become weak and no longer really valid as a zone. Like I said, vice versa, you can see the demand zone. It's the same, just inverted, same concept. And we can go ahead in here and even draw a little diagram. So let's say price action, worked its way up, okay, and then pivoted, started a downtrend. But let's say, it works its way back up, okay, to this, what was this, reversal here. And let's say once that price action enters that zone that had just formed, you immediately get a wick out of the zone, maybe candle closes back out of the zone. That's going to identify that is a strong zone. If we're looking at a zone, okay, price action works its way down after a reversal. You climb back into that zone. Okay, you kind of just consolidate within that zone. Maybe eventually you reject. That's signifying that is a weak zone or a weaker zone. So next time price action approaches this zone, there's a higher chance that it breaks. So these are intricacies that you really want to identify when you're looking at these zones, identifying the potential strength of a zone. Maybe you are looking to go short out of supply. Well, you want to know or try to identify to the best of your ability, what kind of zone are we looking at? Is it a zone that is newly formed and this is the first test of it? The first test of a zone, guys, from my experience, is always a zone that's you're going to see almost always at least a little bit of an interaction. Is this the fourth or fifth test of this area, this resistance area? If so, you want to be careful because, like I said, there's a higher probability that zone has become much weaker and that price action breaks through. Same thing with demand. Okay, let's remove this, drag this down. Say something is in a downtrend, okay, it reverses, creates this zone, but works its way back down and immediately bounces. That's a strong support area. That's an area we can identify, okay, this is only the first test of that zone. this does confirm that it is demand and the zone is still valid. It is a strong zone. And same thing, if you're looking to go long out of demand, you want to identify the potential strength of that zone, okay? This also is extremely beneficial if, let's say we're looking at demand, okay? Let's say that this is the fourth test of this zone, okay? And let's say, we consolidate and then we work our way down, we break the zone. This is also something you want to look to identify. Okay, if something's approaching a supply or demand zone and it's tested this zone multiple times, maybe we look to play the zone flip. Maybe we look, okay, you know what? I think this is weaker, a little bit weaker of a zone. Last time we tested, we consolidated. Now we're consolidating again. We're rejecting our EMAs and we're going to continue down and break this zone. Okay, well, there's another opportunity. You can play a strong zone. You can play a weak zone. You can play a zone break and a flip of a zone, confirming that this is now supply or supply has flipped to demand. It may sound, not that important, but it's extremely important to identify how weak or strong a zone is. And now I briefly want to talk about my strategy for playing these zones. My favorite way to play these zones, guys, are playing fresh zones, intraday zones, or zones that I see on a higher time frame, like the 30-minute, hourly, 4-hour, etc., or maybe even a zone on the daily, a zone on the weekly. These higher time frame or longer time frame zones are going to, play out much more consistently than if you maybe identify a zone on like the 3-minute. But I personally like to look for these strong higher time frame zones, and I like to identify, okay, has this zone been tested yet? Or is this an intraday zone that was formed off the open? I love to play intraday zones because they are fresh zones. I'm looking to get in and out of a trade, just maybe I'm scalping something. I also love to play zone breaks where, like I just drew, maybe a demand zone is broken and flips into supply. I love to play a zone retest where something breaks down. Let me illustrate this. Something breaks down through demand, it retests and rejects. Maybe I instantly play the retest, or maybe I play the neckline break, okay? Those are two ways that I personally really like to play these zones. I like to play fresh zones, I like to play strong zones, higher time frame zones, and I like to play, a zone flip and a retest. Those are, like I mentioned, a few of the ways that I like to play around these zones. It's also very important to note, guys, when you're playing these zones, if you see something ride into demand, okay, and it enters demand, when you're going long, guys, you want to be going long off red candles and short off green candles. Obviously, you're not always going to be able to do that, but that kind of allows you to take an entry that is lower risk. If you're buying into exhaustion either way, if something's in a, has 10 green 5-minute candles in a row and you're going long, that's not a quality setup. Unless you're taking something maybe off a moving average, going long off something or short off something that's been in an extended trend and not taking it, around a zone or maybe your EMAs, just buying into that exhaustion, you're going to get eaten up more often than not. You're going to get stopped out more often than not, because we know the longer something is in trend in either direction, the more exhausted and the higher chance for a reversal. That's just playing off probabilities, which that's the entire stock market, playing off probabilities if you're, doing technical analysis. So, I hope this series helped, guys. After this, I'm going to decide on what I do next. I like doing these series, one a month, and change the theme and topic up for the next one. Please, any feedback is appreciated. If you watched this lesson and it helped, or you're still confused on some things, please reach out. But like I said, I really do enjoy doing these, and I just hope somebody gets some use out of these. Thanks, everybody.